Hi guys, this is Lee with the Market Sense for the week of August 6th, 2019. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And boy, do we have some volatility to deal with this week. This is the 30-year bond, and as you can see, they blew out above the highs last week and have just continued on this week. This is largely in reaction to additional tariffs being announced by the White House on China. There's just not a lot you can do. I mean, I'm pretty consistent with this advice. When you see a market blowing to new highs, there's just not a lot you can do except stand aside. If you could have got the opportunity to buy them around 156.20, that would have been wonderful. Obviously, that's not the case. And if they get down there now, that no longer looks like support, believe me. We were looking at a target in the 160.10 to 12 area. That's the blue line you see up here, the projected high. You can see they've clearly gone well above that. They're going to stop at some point. They're going to turn around at some point, but we don't have to sell them to pick the top tick in order to make money. So we'll wait for some sort of reaction before we have any ability to analyze them. You can't analyze a straight line, and this is a straight line up at this point. I suspect the next move will be due to a tweet or some announcement from China, perhaps, but for now, yeah, sorry. Very impressive. Nothing we can do but watch here. Stocks, of course, look like a mirror image almost. They broke down hard last week, showing signs of potential exhaustion, but they were just hugely lower immediately Monday and continued down, well, overnight between Monday and Tuesday, and then turned back around fairly strongly Tuesday. Now, they really only have recovered about half of what they lost going all the way back to last weekend, but this just doesn't look like a classic low. Normally what we'll see in a low is the market down hard one day and everything, global markets, everybody in Asia and all down hard overnight. And then the U.S. market open the day session lower or be lower in the first hour and then turn around. Well, this turned around in the middle of the night. They were already higher by the time the day session opened. That's just not what looks like a classic low. Therefore, I kind of am worried that we will at least see a retest of this low, and actually think it's pretty likely that we'll take it out at some point. Now, I should point out, just in the sake of honesty, that going back to December last year, this lowest low you can see on the chart, that didn't look like a low to me either, and clearly it was. So, there's a possibility this is a swing low, but yeah, it just makes me really nervous, and I'm thinking we could break down harder. Came into this week looking at 29.52 as resistance. Certainly not resistance if they get back up there now. I mean, they could go up there and turn around again, but it's not a high probability any longer. And, of course, the support was just blown through. They're getting back close to it, but that's irrelevant. The low down here, the lower Keltner band, is around 27.55. That would be really interesting if they were to now turn and go back down there, just take out the lows sort of marginally into that 27.50 area. That would be interesting to keep an eye on to see if there's a potential to buy there. But at this point, of course, it doesn't look like they want to do that. They've had a pretty good rally, and you would think they would calm down at some point. But again, the difficulty here is the next move we get will probably either be based on a tweet or an announcement from the Chinese government. Neither of those are anything you can analyze very well. So, we're kind of just on the edge of our seats waiting to see what happens next. So that's what we've got for you today. I hope you can find something profitable to get yourself into.